Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into a filing that involves money moving around and some promises being made. Sounds like a soap opera, right? Except it's business. We're looking at a Form 8K file by Augusta Gold Corporation in late March of 2025. Form 8K filings are used to report major corporate events that shareholders should know about. The company seems to be making some adjustments to existing loan agreements. So let's dig in. First up, Augusta Gold amended something called Schedule A to their already amended and restated secured promissory note with Augusta Investments Inc. It seems like they've been tweaking this note multiple times since it was first issued in September of 2022, then amended in March, June, September, and December of the previous year, 2024. Think of it as constantly rewriting a loan agreement as more things happen, and December of the previous year, 2024. Think of it as constantly rewriting a loan agreement as more things happen. This latest amendment involves Augusta Investments Inc. lending Augusta Gold an additional $250,000. This happened back in March, so basically it's like adding another room to a house you're already renovating. With this addition, the total principal amount of the amended note comes to $30,601,390 note comes to $30,601,309. That's a lot of money. The filing says that outside of this additional loan, the original terms of the existing note remained the same as previously disclosed in prior filings from 2022, 2020, one none of the amended note comes to $30,601 from 2029. That's a lot of money. The filing says that outside of this additional loan, the original terms of the existing note remained the same as previously disclosed in prior filings from 2022, 2024. Next, they also amended an agreement with Donald R. Taylor. It's an unsecured promissory note that Mr. Taylor agreed to purchase, originally worth $262,500, including an origination fee. Unsecured means it's not backed by specific assets. In simple terms, if Augusta Gold can't pay, Mr. Taylor can't just take their gold mine, for example. This amendment changes the terms of the purchase agreement to account for the fact that the amount of the loan to the company may change from time to time and will be recorded in a schedule to the note. They also provide for multiple closings to occur at mutually agreed upon dates as necessary and change the deliverable documents for each closing. Think of it like a flexible spending account for a company. Around the same time, Taylor loaned the company another $100,000. This brings the total amount of the note as of late March of 2025 to $300. Again, that's the original amount plus this new loan. This amended note has the same terms as the original. Item 2-3 is just a formality referencing back to the earlier details. Finally, item 901 lists exhibits related to this report, including the amended schedule and the amendments to the purchase agreement and Taylor note. Now let's take a step back and analyze what this all means. Augusta Gold is taking on more debt. This isn't necessarily bad, especially if they are using the money to expand operations or improve their mines. However, it does increase their financial risk. The reliance on loans from Augusta Investments and Donald Taylor also raises questions about their ability to secure funding from traditional sources like banks. Perhaps the traditional avenues are too expensive or too restrictive. It's hard to say without seeing the details of their entire financial picture. The fact that they keep amending these agreements suggests that their financial needs are evolving rapidly. They might be adjusting their plans as they go, which isn't uncommon for a company in the mining industry where things can change quickly, but it also shows that planning and budgeting may be tough for them. Ultimately, these moves show Augusta Gold is in a growth phase, albeit one that requires external funding. The key will be how they manage this debt and whether they can generate enough revenue to repay it while also growing the company. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate deep dives. Let us know in the comments what company we should decode next.